we got a little bit of a laugh here in studio with our next guest is joining us, Henry Fung from MF & Co. Asset Management. Henry, welcome. Great to have you here.
I'm good to have you.
Good morning. So, market timing, macroeconomic, fundamental analysis.
Yeah.
What is sort of front and center for you right now?
Right now, it's all about, it is very bullish at the moment. But what I'm really a bit concerned about is just a massive rally we had last month, basically, which is the biggest one we've had in about 30 years. And I think it's a little bit overcooked. And you were just saying, everyone's bullish right now. Is it time to be a little bit bearish? I'm of that little bit bearish area. Look, we are about 7% off the top of, the market's highs at about 7,100, just before the crash. And, international travel is still closed, tourism is still closed. Education, a lot of professors and so forth are losing their jobs. And all the students that should be here, and also the ancillary sort of, restaurants and all the support, all the rents that should have come through are not here yet. So at the moment, I'm feeling that a very large chunk of sort of our recovery right now is obviously due to stimulus. So I'm a bit concerned, when they start pulling back on the JobKeeper and so forth. Where's our economy going to head? GDP numbers are obviously a lot better now, but still it's a lagging indicator. So,
Henry, so how does an investor play that? There's a couple of different ways you can go. You can switch more to a defensive set. You can move to cash, for instance. You can even go short. Some different ways to sort of, if you are a bit cautious, to play that. How would you recommend investors play that?
I just think don't be overly excited. Don't leverage yourself too hard into any positions. A lot of the problems when it comes to sort of these tops, people start getting a bit of FOMO and they start leveraging up. Oh yeah, keep adding on, boom. Next thing you know, the market's off 10, 15%, and you're stuck in these extremely horrible positions. So I think the way the market's going to go is it's going to continue to grind up. But we're going to have these black swan events, as was mentioned, where these major shocks will just come through, the market will drop 10, 15%, government will come into support, and then straight away everyone's buying the bottom, buying the dip. So I think right now being long is obviously correct. Don't be over leveraged. Don't try to time the crashes or the corrections, because you never know what's going to happen. It could happen tomorrow, market's off 5, 7% in one day. But be ready to buy the dips, because the governments have shown that they'll do whatever they can to support it. They've come out and said, we'll buy everything and anything just to keep it going. So,
and that was one of the criticism post-GFC,
yes,
that government started worrying about austerity and pulling back too quickly,
yep,
and therefore, lost some of the momentum from some of the stimulus that was already put into the economy. So, given all that, I'm curious to get your thoughts on gold. I mean,
yep,
do you look at gold as potentially a way to buy yourself a little bit of defensive-ness in this? Do you look to the Australian miners, if so?
Yep. I've been bullish gold since last October or so, purely because, with the stimulus stuff that's happening around the world, and now with the COVID thing, it's even more stimulus coming through. I think gold always has been and will continue to be a good hedge, and just owning some, not necessarily a lot, would be a good thing for a portfolio. I'm not the biggest fan of owning direct shares rather than the actual gold itself, because it was, as we saw during the COVID crash, even though gold pulled back because of liquidation, gold stocks crashed along with the rest of the market. So obviously owning gold companies in the Australian market also has company risk and other risk attached to that versus owning the actual gold itself. So definitely I'm bullish gold probably forever,
yeah.
because the way we're printing right now, we're not going to unprint. We're just going to keep going.
And then when it comes to, I suppose, the other big conversation that we've been having is this sort of growth versus value, or the cyclical debate. So do you look, when you're talking about this economic recovery, even though there will be volatility, do you look to cyclicals? Do you look to the miners in general?
At the moment, I'm probably looking more towards tech. Miners I've liked, but ever since China sort of stopped buying as much as they did before, I've been a little bit less interested towards sort of the resources space. So tech at the moment, even though Australia is not that massive compared to the US, tech has been quite a strong place to be. I'm more of a growth guy rather than more of a sort of defensive. But obviously, when the markets crash, I did go more defensive towards, for example, like Google Worths or Westfarms and so forth. But right now, it's just everything's rotating back towards sort of the growth area.
Henry, I did notice you guys released a best 5 stocks to buy for next year. One stock that caught my eye, and speaking of tech, was PushPay.
Yes.
Do you still like those guys?
I still do. So PushPay, I guess, in a very quick nutshell, is payment systems for like churches and so forth. And I'm thinking, my view is that if we as a planet or people can actually learn from our mistakes in terms of handling hygiene and so forth. Like for example, in Hong Kong, when you had SARS, after that everyone learned. They had sanitized everything. There's a lot of PPE. People were very tuned into what the issues could be caused by a potential pandemic. If we are going towards that area, churches as well would probably start thinking of using ways to digitize their payments, their donations. And of course, they can also create systems around people doing like a monthly thing and so forth. So I think it's a good area to go into. And churches, it's a faith. It's not going anywhere.
Yeah, right. And also, it builds in that stickiness, doesn't it,
yes,
for the payments
right,
if you sign up and you've got them coming out automatically.
Yeah.
Another one I just noticed on your list there was Helios. It's come up in a couple of conversations we've had lately.
Yeah.
It flies under the radar to a large extent, doesn't it?
It does a bit. I mean, I need to, because the last time I wrote that was a little while ago, so I probably need to go back and take another look. But I'd have to really go back and take another look on that one. I don't want to say too much on that one.
Yeah, okay,
yep.
cool. Listen, Henry, it's been wonderful to have you join us.
Sure.
Thank you so much. You're welcome back anytime.
Thank you.
Henry Fung there joining us from MF & Co Asset Management here at Barangaroo.